Good afternoon, everybody. Can anyone hear me?
Yes, we can hear you.
Yes, good afternoon.
Good afternoon. Thank you all for joining in. Sophie Desmond. I can see we have one of our mentors on call already. So please, could you reach out to your fellow mentees to join the call? We're already starting. And apologies once again that I can't put on my camera. So I'll just go ahead in reading and introducing our mentors for today and reading their profiles. We could welcome you, Mrs. Miriam Hassan. I'll go ahead in reading your profile now. So Miriam Hassan has 10 plus years experience in financial services and payment sector. She is known for developing methods that accelerate the development of ideas into business ventures, building strategic partnership for business growth, and with a track record of driving growth in competitive, fast-paced environments. She is a skilled digital transformation, innovation management, and strategy professional and holds certificates in digital transformation, innovation management and strategy, and an MSc in innovation management and entrepreneurship. She is an automobile enthusiast who enjoys traveling and reading. She is also very passionate about giving back by imparting knowledge through any means available and is inspired by women in positions of power. So we welcome you to the call, Mrs. Miriam Hassan. Thank you so much for joining in, and we look forward to an insightful session with you. Thank you once again, Ma. Moving forward, I'll just display Mr. George's profile. We'll be expecting Mr. George on the call also. Mr. George currently heads Fintech engagement for First Bank and its subsidiaries across Africa at a digital innovation lab, setting up and driving the bank's fintech strategy. So we've read Mr. George's profile for the first week and the second week. So I'm sure we are all familiar with it. So we'll be having Mr. George soon on the call later on. So thank two mentors too for showing interest to mentor us this quarter. So once again, thank you all for joining. Today's topic will be on fintech business models, profit models, and the fintech sector spread. So moving forward, we will take an introduction to the topic from our mentor, Mrs. Miriam Hassan. Ma, please, the floor is yours. Thank you so much.
Okay, thank you very much. Is it okay for you to pull up the presentation? Can you hear me? Looks like my screen is frozen.
Yes, Ma, I can hear you. Okay, so I'll help in sharing the screen. Just a moment.
Okay, so hi everyone. Good afternoon to everyone on the call. I'm sure we're expecting a lot more people on this call because the presentations that was shared, I think I saw about 10 mentees that are supposed to be on this call. Just wanted to say that it's very important that when you have sessions or anything, whether it's a meeting or not, it's important to always join early so that you don't miss out on the good part. So maybe it's something to take away from here. Time is money for everyone, for every single person that is on this call. The time you're giving up or sacrificing to be on this call is important to you, right? So it means that it's important to be respectful of people's time and your time as well, because you could have been doing anything else, but you decided to be on this call. So I just thought to mention that. So for the mentees that are not on this call yet, you sacrificed your time, in the past week to come up with this. So you might as well just show up on time. Right. So it's good to be here once again. I've been part of Gypsy for I think maybe 3 or 4 years now. I've been mentoring here. And it's been a pleasure to, and I'm also thanking Gypsy for the opportunity to, impact one way or the other and mentoring again and being back here. So my profile has been read. Currently, I'm still on career break and spending my time exploring opportunities inside and outside of payments. Right. So obviously, I still have my background and experience in financial technology and payment. So, okay. But can everyone see your screen though? Looks like you're using your phone, right?
Yes, ma, pardon me. I am.
Sophie, don't worry. I will
Okay.
stop share the screen. You can stop sharing.
Okay, okay. All right
Okay, so
then.
that it's bigger and people can clearly see.
All right.
So the topic for today is fintech business models, profit models, and sector spread. So I have a presentation that I'm just going to talk to, but I'm guessing everyone on this call in this time and age knows what a fintech is, right? Financial technology. And what they really do is to just leverage technology to um, offer financial services to all of us, right? And I'm sure every single one on this call, one way or the other, has, would I say, enjoyed the services that fintechs have been able to develop in Nigeria, right? So I would say that would we call them the Gen Z version of banks? Because banks are like your traditional banks, but fintechs have brought a different spin to how financial services are offered. So I'm just trying to speak pending when the screen comes up. Okay. Okay. So yes, this is my presentation. So yes, the next slide. So I can just get to it since I already spent some of my time. I only have 15 minutes to do this presentation. I'm still seeing the cover page or do you want to move to the next one? Okay. So, what is fintech business model? Like I said, most of us on this call already know what fintech is, financial technology. So, what is the business model? How do the fintechs bring product to markets, right? What are they required to do? What are the things that they need to put in place to be able to bring product to market? So, it means that if a fintech today decides that, or you decide today, I want to start a payment company, what are the requirements, what are the things that I need to put in place, right? Just like how you have your business plan, how you put a business plan together to be able to bring that business, which is an idea, to life. So we have several payments platforms today. We have payment gateway providers. We have lending fintechs who lend today, right? Before they brought those products to life, there were a set of things that they needed to put together for that to work out. They just didn't have the idea and say, oh, I want to lend. I want to build a payment gateway like a Flutterwave or a Paystack, which we're all familiar with. They had to put some things in place to be able to bring that product to life from an idea. So today, one of us on this call decides that, oh, I have an innovative idea. I have a way that I can collect payments that is different from what exists today. So how do I go about it, right? I need to put a business model together. But what is a business model? Business model basically is really what allows companies to create, deliver, and capture value holistically, right? So regardless of what type of business you're doing, whether it's in the fintech industry, whether it's in the legal space, whether it's in agriculture, whether it is in oil and gas, business model allows anybody in any sector basically to be able to create value, capture value, deliver value, right? So how do you create the value? How do you deliver that value, which we would eventually look at? The next slide would show us what a business model canvas looks like, right? And in the different parts, it will show you how to create, deliver, and capture value, right? Fintech business models, the only thing that differentiates them is because it's now the sector is the financial sector, right? So it means that if you're in the fintech sector, the business model that you develop is designed to do the same thing, which is how you create value, how you deliver value, and how you capture value in the financial space, right? So a business model enables a company to describe, design, challenge, invent, and pivot. So you can describe what your business is about, and at a glance, you look at your business model, you already understand. Anybody that looks at that business model has a sense of what products you're looking to bring to market, right? It helps you design it. It helps you challenge it as well. So most business models are not cast in stone. They can always be developed and be changed, right? So you can look at the business model and challenge it. Oh, the cost structure, the revenue structure, how can I change that? The cost is higher than the revenue, right? It also helps you event. So, like I said, you have an idea, an innovative idea that is different from what exists today in Nigeria in terms of payments, and you want to be able to develop that. Business model helps you capture your thoughts together, puts it in one place, and helps you understand how to deliver value. You can also pivot. A lot of fintech companies sometimes when they started and where they are at now, it's very different. So you can start with a particular product, design your business model around that, go to life with it. And as you go to life, based on your customers' feedback or your consumers' feedback, you realize that, oh, I think consumers are tilting towards this more than this, right? So for example, you have a payment app, and people buy things on that app. Today, I don't know if all are familiar with virtual accounts, right? Accounts where you want to make payment, people transfer like the vendor or whoever is paying or on the app. A one-time account is generated for you to make payment. The option is there. The option for card is there, right? And you notice that everybody is tilting towards accounts. And based on consumers' feedback, you can actually iterate on that payment method and decide to pivot completely from what you've gone live with, right? Your business model also allows you to do that. So fintech today has transformed the financial industry, which we all know. It has helped payments, to be better. It has transformed a lot of the different segments of the fintech space, right? So we know that fintech today ranges from payments to lending to investment to remittance to insurtech to open banking and the likes, right? So the next slide, please. Thank you. So this is a typical business model canvas. And everything I'm teaching you seems like theory, but at the end of the day, you still have to go to market to validate every single thing that you put in this business model canvas, because only the market can truly tell you if you're on the right path with the products that you've developed, right? So you can put everything in theory, but the market is really where everything happens. That's where you get your problem solution fits. That's where you get your product market fit, right? So holistically, like I said, this business model canvas helps you understand how you're going to create value, how you're going to capture the value, and how you're going to deliver the value. So let's start from the customer segment. The customer segment helps you narrow down, identify who your audience is, who your target audience is, who are you selling to, right? In the market, who really are you targeting? So if you decide that you want to lend, right? Who in the market, in that niche, that market, or is it SMEs you want to lend to? Do you want to lend to big businesses or corporate? Do you want to lend to people who are financially excluded, right? So you need to be able to decide who your customer segment is, right? When developing any business at all. So when you're creating value, who do you want to create the value to? The channels, how do you intend to deliver that value? Remember, I said business model canvas helps you create, deliver, and capture value. So how do you intend to deliver that value that you decided you want to be able to create for those customers? Do you want to deliver it through a mobile app? Do you want to deliver it through a web platform or a web app? Do you want to deliver it through POS? What channel are you looking to use to deliver that value to your customers? Do you just want to be to deliver your value through WhatsApp, right? Today, there are apps that people can pay through their WhatsApp today. I don't know if any of us have experienced it during payment. So is that how you want to deliver your value to your customers? Then for customer relationship, how do you want to be able to relate to your customers? Is it through live chats? Is it through emails? Is it through social media, right? So how do you want to relate to your customers on that? Another very important part of your entire business model, if you're developing any type of fintech or payment product or lending product, is what is the value that you're creating for those customers or these niche markets that you've identified? What is your unique selling point, right? What is that thing that differentiates you from people in the market? What's your differentiation in the market? What is your competitive advantage? You have to be able to identify all that, and that's what makes you stand out in the market, right? That's what makes you different. Like I said, you have Paystack, you have Flutter. We've developed a payment gateway which allows them to, collect payment, accept payments. And you want to invent something different and new, or you want to just build on what exists, in the market. What is that value that you're creating for the customers? Because if customers are going to be paying you for transaction fees or whichever way you've decided you want to make your money, what is that value that they are paying for? So you have to be able to identify what your unique selling point is. And identifying it, like I said, everything here is on paper. It seems good. It's all theory. But the market is the reality. That's where you really get, if there's value that you've thought about, you want to be able to deliver. Is the market accepting that? Is your product, is there a good product market fit for that? Are you solving any problems through the value proposition that you have decided upon? And the market can help you keep iterating on, whatever value it is that you create. Sometimes the customers even decide the value, based on the feedback. You get to understand that, this value that I'm looking to create, I can create it in a better way. What are the key activities? How do you intend to, what are the activities that are required to be able to create, deliver, and capture this value, of your fintech business model? What are the resources, that you need? Do you need to hire developers? Do you need to hire a payment strategist? Do you need to, what are the resources that you need? Do you need to pay for cloud, to be able to deliver this value? Who are your key partners? Are they banking partners you're going to be collaborating with? Is it the regulator you're going to be collaborating with? Who are the key partners that are required for you to deliver this value? Now, what is your cost structure? To be able to bring this product to market, what is the cost that is required? What does it entail? How much do you need to spend? What are all the different costs or the miscellaneous costs that you that would help you deliver that product to market? Now, what is your revenue stream, which we would speak extensively on or more on when we move to the profit model? So how do you intend to make money from this value that you're delivering? How do people pay you for the value that you're delivering? And what they are paying you, is it commensurate with the service that you're rendering, right? And in designing or developing what your revenue stream is, sometimes to what you go to market with when you do your pricing strategy might also change over time, depending on the segment of the market that you're targeting. So if you're targeting people at the bottom of the pyramid, how much are they willing to pay for this service that you're rendering to them? If you're delivering a service to high end or to banking partners, how much do you think that this value you're creating, what pricing can you tie to that value, right? But at all times, you also have to keep in mind that whatever whatever revenue you're making or whatever profit or whatever you're charging has to cover your entire cost. So you have to check for business model risk as well, that your cost is not higher than what you're making from the market. You can also decide how you intend to make money. You can decide that you're going to charge zero fees from the beginning, because what is important to you is customer acquisition or is the data that you're getting. And eventually, so you can decide you want to give free transfer fees, right? Or free usage fees for whatever. So holistically, this is what the business model canvas does for you. It really just helps you understand how to create the value, how to deliver the value, and how to capture value holistically. And like I said, this is just theory. more often than not, the market is what determines a lot of these things. It's not cast in stone. It changes over time. You can always come back, to make changes to it. Sometimes you have to pivot as a result of what the market is given, and you have to make changes. So it's a living document where you have to constantly be updating. But it's a good to have, because this is just one aspect of what you have in your entire business plan, right? When you have that business idea, and at a glance, you can look at everything that the business kind of entails through your business model canvas. So the next screen, please. I'm just trying to make sure I use so this is just really explaining, and this is what I've talked on. The next slide. So this is just like an exercise. Maybe much later you get the presentation slides. You can use that business model canvas, whatever idea you have. If it's in the fintech space, like I said, it's not just a business model canvas targeting only the fintech industry. Any industry at all where you're trying to bring product to market, you can use this business model canvas to decide what your value is in terms of how you want to capture, create, and deliver. So the next slide will be speaking on, the profit, the profit models on how you intend to make money. So there are a lot of profit models, really. What I just tried to do here was to put together the different ones that I think, in the fintech space. How do people capture value? How do you intend to make money? It ranges from, subscription fees to commission to licensing to advertisement to transaction fees. Now, depending on the type of business that you're doing, that's what determines the kind of profit or pricing strategy, right, that you think it works for the value that you're creating. So if you're creating a payment app, for example, what makes sense is that you're charging transaction fees, right, on those transfers. So today we do our transfers from UBA to Providus or to First Bank, right, and you're charged a fee. There's the transaction fees, which is 50 depending on the amount you're transferring, right? Sometimes it can also be an app where you need to pay subscription fees. So if you build an e-commerce platform, where you have merchants and you have buyers and sellers, and the merchant, for example, pays a subscription for them to be able to use that platform that you've designed, that marketplace, right? So based on the type of business, that sort of determines how you capture value or what your revenue model would be, right? It can also be commission on certain fees, meaning maybe after maybe based on the volume of transaction that is done, you want to charge a certain commission on that. You can also have API fees, right, where you're charging fees maybe per call of API that's been done, or or based on the calls of the APIs. I don't know if you're familiar what APIs are, application programming interface, which is how systems connect. So today, fintechs connect to banks through APIs. They consume their APIs for interoperability of their systems, right? You can have licensing where you can decide that the license that you have, if it permits you to extend that, you can also charge that person to be able to leverage on the license that you have. Some fintechs can also decide to have adverts within their platform, right? Sometimes, depending on the audience or the type of customers that passes through their app or their web, they can decide to advertise and allow maybe consumers advertise through that app, and they make money from that. I've also spoken on, what transaction fees are. So these are the different ways that fintechs can make money. It can be more, right? Just depending on, it's just this. I think what decides that is the type of business that you're doing. So the way a lender or a fintech who is into lending would charge would be different from the one who is doing payments, depend who is into investment. So the type of business you do determines the type of revenue stream. So it's not one size fits all. It's not that everybody's doing subscription, so I have to do subscription as well. What type of business do you do? And that's what decides the revenue, model that you adopt. The next slide. So this is just really the fintech, spread. What's happening today in the industry? We know that fintech is rapidly growing, but there's still a bot. There are bots that are going on, where we're trying to decide, do we need more fintech products, or do we need to increase the purchasing power of people? Because if every now and then people are releasing payment apps, lending apps, people need money, to be able to use those apps. So you're designing a savings app. Do I have enough money to save, right? You're lending. Do I have business to be able to lend, right? So those are the things that maybe we need to sort of rethink, or people are putting into perspective now. Do we just design fintech products that help people make money, increase the purchasing power of people first before they can even use some of these apps? But we know that is one of the most popular sectors, in Nigeria, and they get majority of the funding, even though that has kind of slowed down. The sector has attracted huge amounts of money, which has kind of impacted the economy. Everybody now is kind of familiar with what fintech is in Nigeria. The market segment is one of the largest, especially digital payments in Nigeria. And Nigeria approximately has probably more than now, well over 430. I don't know if it's still 430, because every now and then you hear that, what's the word? They're folding up, they don't have enough money to continue their runway. It's done, and they're unable to, so they come out to say, oh, we're closing up. We cannot keep running because we don't have enough money, to run. But it's sort of, it's still the biggest industry anyway, not just in Nigeria, but in Africa as a whole. I think that's about it for my presentation. Is there anything else after this? Okay, so what's next? AI is really taking over. I think we're getting to the point where if you have a product or a business where you've not sort of found a way for AI to fit into it, you probably might be left behind or become obsolete. So AI is gaining a lot of ground on the Gartner hype curve. Is already getting to the place where it is largely adopted and acceptable. It's almost like every business now has to catch on how AI can fit into their processes. So it's gaining a lot of ground. It's also helped people can build apps now using AI. But we still need the front end developers anyway, or the back end or full stack to do their work. Nigeria, for open banking, I think there's some regulation around that now that's kind of gaining ground. Buy now, pay later is still, I won't say it has progressed as much as it has in the West, but it's still something we're looking forward to. Contactless payments, work in progress, digital currencies are also looking promising in terms of what is next for fintech. Next slide. I think that's it for my presentation. So yes. So thank you all very much. I hope I didn't spend too much time doing my presentation. So over to you, Gypsy team.
Okay, sorry. Thank you so much, Mrs. Mariam, for helping us run through through your slides, giving us an introduction into the topic for today, and also just helping us discuss in detail, even though it was largely summarized, but also fully in detail what business models are, profit models are, and how they should apply to fintech. So we really, really appreciate you. Once again, thank you very much, Mrs.
You're
Mariam.
welcome.
All right. So, all right, we have Mr. George on the call. I think we still have him. He was here some minutes ago. Okay, yes, Mr. George is still on the call. Thank you so much, Mr. George, for joining. We are happy to have you in the session. For the mentees, please, I want to encourage us to get ready for our presentation. Once Mr. George is done with his sharing his thoughts with us about the topic for today, that is fintech business models, profit models, and the fintech sector spread, we would move over to your presentation. I would like to take that as quick as possible. Right, so please get ready. Once Mr. George is done, we'll call you up for that. So, Mr. George, thank you once again for joining in. We are happy to have you in the session. Please, I would like to, maybe in the next 20 minutes, also get to hear you share your thoughts with us on the topic for today. You're welcome, sir.
Thank you. Can you hear me?
Yes, sir, we can hear you
Yes,
loud
we
and clear.
can. Hi, George. Good afternoon.
Yeah, good afternoon, and great presentation. I think I tuned in a bit late, but I caught a good part of it, and it was quite an interesting one. It's been a bit I saw that business canvas. It was a good memory refresh that you did there. Well
Thank you.
done.
Thank you.
Yeah, I mean, I think that Mariam has already killed or done justice to the topic. Typically, this is the point I will say, thank you, and let's move on. Probably just add some little parting comments to what she has already done. There are a lot of texts around business models and how fintechs could position whatever they do with whatever model out there, or whatever theory around the various business models out there, right? So I won't be very um, theoretical on this. I think my few comments will just come from a bit of a practical perspective around what really matters, right? I think I've been on the various sides of the divide, right? Both from the part on someone working with guys that help build fintechs to someone leading a fintech, to someone that also part of a fintech, that have got into an accelerator, to someone that exited a fintech, someone that also had a fintech that failed, someone that also is currently running a one I would call a bit thriving now. I've been like the whole 9 yards, right? And over the time, you just kind of figure out there's some things that with all the many techs out there, it just boils down to some very, very simple things that really matter, right? The whole thing around business model boils down at the end of the day is how do you create value, right? How do you distribute value, and how do you get value in return, right? Um, in form of revenue, right? How do you create value? What it is that you want to do as a fintech, what you call your solution, right, out there that you want to put out, right, for people to use, right? How do you distribute value? And when you're thinking about how you're distributing that value, you start factoring some of the things that Maria mentioned earlier around who are you targeting that solution for, and how would you get it across to them? What channel are they supposed to access that value from, right? But people underestimate, in fact, you win or you lose based on how you figure out distribution, right? How you are able to get your solution to the hands of your target market. And that distribution, a lot of time is underplayed. A lot of times you learn it in a very practical, hard way around what distribution really means to the lifeline or the lifeblood of a fintech, right? So that I have a solution out there, right? As a founder, you create a solution. The euphoria of I've launched, all right, I've gone live. First day that you do your first transaction, you're all over the moon, right? You now have a product, right, that you can go there and market, right? But if you've not figured out how can I actually distribute this product, why will I win? How can I strategically get this in the hands of many? What is the channel that I'm going to do it? Am I going to partner with, for example, I'm in the lending. I think Mariam used a lending app in one of our example. I'm a lending app, and I'm asking myself, my target is to lend to SMEs, right? Who are the guys that aggregate SMEs I want to partner with? So, do I rather go to run ads and spend millions of naira to SMEs, or do I go to somebody that has already aggregated SMEs, right? Already giving SMEs some kind of value already, right? And say, you know what? These SMEs that you're giving this value, I have something else that they want, right? Which is finance. Probably, for example, go to some of the big suppliers to those SMEs and say, you know what? These SMEs that you're supplying goods today, One of the challenges they have is they don't have enough money to take enough goods off your shelves, right? Can I partner with you so that they have an option to fund those supplies, via the finance I provide for them? So if this guy, for example, is supplying, let's say, 10,000 SMEs, right, with products every day, that partnership all automatically unlocks you to 10,000 potential customers, right, that could access your funding in order to acquire the supply, or probably increase what they would typically have bought with cash, right, from that supplier, right? So, and if you're looking at reaching out 10,000 people off on your own, you probably will have spent some, good millions in advertising that you need to, track their conversion over time for you to adequately reach 10,000 people, right? But by having that strategic partnership, that distribution, right, to those SMEs that the supplier is already supplying goods, that you are now layering your finance as an complementary product within that network, right? You've already accessed 10,000 guys, right? Actual customers, actual potential customers, not noise. People that are actually buying products, right? That need financing with almost zero spend. So distribution is very, very close to where you live and die, as a fintech and as a business generally, right? How you are able to cost effectively get your product to the target users that potentially can use your product or your services, and of course how you get return, value in return, which is revenue, right? Um, you need to be able to cost. Yeah, I mean, a lot of time, there's a lot of focus on cost as a business, but you see a lot of times, most of the experience in investors, for example, if you are a software person, if you're a fintech and your business is software, costs become the lesser of an issue, right? Because a lot of your costs are fixed. So it means that the more you scale, right, increasingly your cost declines. And that's why you see, so it becomes more about how do you capture more of the market. So your business model is all about acquisition, right? Acquiring customer, because your unit cost does not increase with the number of guys that is in front of you, but your unit cost dramatically declines, right? As you're expanding. So a lot of times, that's why you see a lot of times you hear Amazon was not profitable for God knows how many years before a few years ago. X platform has not been profitable, and these guys are making what, hundreds of millions of dollars in revenue. Some of them are actually making billions of dollars in revenue, right? And over years, they focused on acquisition, right? And that is where all their money and all their energy were. And after acquiring the market, after taking leadership in the market, then they now focus on profitability and on costs, right? And once you become that market leader, right, it's now easy for you to do a couple of adjustments to either increase profitability or reduce costs. So a lot of times it's all about when you figure out what am I actually producing, right? What's the solution I'm actually bringing? What's the value that I'm actually bringing into the market, right? How do I creatively distribute it? Because if you're serving a need and nobody is using it, you're going to die as a business very quickly. And a lot of fintechs, they find that out over the period of 1 year, 2 years. Every 9 out of every 10, in fact, 9.5 out of every 10 will die over a 2 year period, right? Because at some point, you will see that initial euphoria, that initial network of close friends, that you're leveraging on their contacts to have people to try your products, that initial first few persons is not enough to sustain you as a business to continue going. So you get your first 10 users, you get your first 100 users, and you get your first 500 users, and then over time you stagnate at that point if you've not figured out your distribution. And then you now find out that, look, the cost of maintaining your solution over time, right, with the revenue that you're doing, especially people that start with freemium models where they are not charging anything for their solution, right? You will just find out that over time is not sustainable because you start using out of your pocket to sustain the business. So if you're working, for example, in a company and you're starting a fintech by the side, you have to be using your salary to fund that fintech. And over time, you just notice that it's not scaling, right? You will just be in a perpetual loop of moving all your salary into that fintech. So if there's anything you're taking out from here, whether as a consultant to a company or whether as a fintech or somebody that is planning to start a fintech, um, if there's anything you're taking out from this conversation is at any point in time you sit down in the business, what you're trying to figure out is how have they figured out distribution? How are you planning to distribute? What is your unfair advantage in your distribution? Are you controlling the supply side? Are you controlling the demand side? Where does your unfair advantage lie? If you don't have an unfair advantage in the market, you can't succeed, right? You will just be very fanciful, right? But you can't really succeed. For you to be able to succeed in the market, your model must have an unfair advantage somewhere. It's either that unfair advantage is from the fact that you have a very increasingly unique method, for example, that you are doing something that nobody can replicate. And that method is incredibly cost effective that it will allow you to distribute at a very insanely cheaper cost. Or you have access to the market pool that most of your competition, will struggle to have, right? Or you're able to uniquely reach consumers directly in some type of way, right? Or you're coming from a known brand. Maybe you've successfully done something in an industry, even if as an employer, right? You're well known for that thing as a go-to expert, so that you now have like a brand, your personal brand that you want to translate into your business, wherever it is, right? Your unfair advantage has to be very clear. If you're on the same pedestal, right, with just about everybody in that industry, I tell you very bluntly, you won't succeed, right? Because the truth is that for you to whatever it is that you're trying to do today, right? There are existing people in the industry providing that service in one form, shape, or the other, right? It might not be the exactly unique idea that you have, but there are people that are able to meet that same need in some type of way, right? And if you don't have a very unique advantage, especially that ties into distribution, then you're going to struggle. Most of the leaders of the market segments today that they are in, we're not the first people in those segments, right? The whole first mover advantage thing, right? Over time, people found out that it was overplayed. Most of the leaders today in most of the market segments were not the first guys that actually moved in those segments or in those industries, right? They were probably the second, third, fourth set of guys that came around, right? In fact, they probably learned from the mistakes of the first users. But if you look at most of them, there are different places where they were able to have their unfair advantage. There are different places where they were able to have unique distribution models that made them become winners in whatever market that they are selling today, right? If you look at today, sorry, yeah, thank you. If you look at today, for example, if you look at globally, before I come to the Nigerian segment, if you look at globally today, if you pick an industry and say who are the leaders in X industry, right? Google was not the first search engine that came out. For those of us that have been following internet for almost the time it became like popular, right? Probably would know names like Alta Vista and the likes of them. Facebook was not the first social media that came out. MySpace was very well known before Facebook came out, right? Um, which other industry I want to use to give an example? Amazon was not the first shopping site, that was out there. You understand? So a lot of these guys, the way they manage distribution, Facebook, for example, while MySpace like was all over the place, Facebook had a network of schools. How did Facebook blow up with distribution? They had a network of all the universities, right? They were going from school to school. So basically, all the students in all the Ivy League schools, right? Before you even heard about them, they already have millions of subscribers through the network of schools, that they had then at the time. So that distribution started by going through all the network that they had through their alumni of schools. And when they had like most of the schools in the West all on Facebook, by the time they now came out to mainstream, they were not starting from ground zero. They were already well, very well, right, ahead of the curve, right? Because of how they use the distribution. You get, so most of the time, we need to be able to look at our business model from the perspective of, I have a product or solution that I want to bring to the market. I think it does the wonderful things that I think it does. I have been able to identify whom it's supposed to be for. A lot of time people struggle with this anyway. We take it for granted. But let's assume I've been able to identify who it is for. But how do I get it right? How do I get it cost effectively to them? And I might be a difference between success and failure. Even when it's free, you will see a lot of times that your application is free doesn't mean that people are using it, right? So how do I effectively get it to them? What part of the market am I really coming at? Am I trying to, you know, am I coming strategically with a unique advantage on the demand side, or am I coming on the unique advantage on the supply side? Where exactly, is my unfair advantage? Why would I win? It's not enough to have a product that does X. You need to be very clear on why would I win, right? If you're not able to, if your model cannot answer that question very clearly, why you're going to win, right? And you're all caught up in the beauty of the product or the service that you're doing, you will find out very quickly, that all that excitement will fade on time, right? So it is very important, that we, to all the wonderful things that we've heard earlier, right? Just to add that it is very important that at the end of the day, right, we are conscious of what matters, right? What really matters. If you are able to solve some of these things that really matters, all the other things you figure it out on the way, right? There are a lot of things you would not know clearly from day one. A lot of those things you will just figure it out on the way. But for you to survive enough to be able to figure out all those other things, you must even, first be thriving, right? If you're not thriving, you won't be in a position where you're able to figure out, right, all the other things along the way, right? And lastly, on the part around sector spread, I think I saw something in the topic that talked about sector spread, right? Uh, Now, the various sectors, right? Whether it be value propositions that we have around lending, whether it be the various models you can think about, payments, the various whether it be networking, social networking, right? Sector spread, the way today, I think we have a good, robust appreciation around a lot of fintechs, a lot of solutions that make up, these various sectors, whether it being digitally driven, whether it being the guys that are combining hybrid, right, combining digital and physical infrastructure, right? In that particular industry, a lot of them you will see they come, they go. While you will see some within that sector, you will see some of the guys that are there that are a bit more permanent, right? That have achieved a bit of longevity within those sectors. Now, why sector spread is a thing, when you're going into a new sector, or when you're going into when you're trying to bring out a fintech solution, you're looking at what does the sector look like, right? The truth is the impact of the competitiveness of the sector, right? Uh, the impact on it on you as a fintech, right? Um, is also a function to why, right, you need to take some of what I said earlier around distribution very seriously, and it has very minimal impact on whether you succeed or not. There are a lot of sectors today that even with the players there, you will see that probably one, two, three guys dominate the entire sector. Probably have like 90% of that whole sector market share. Why every other guys, whether they are 100, whether there are 1,000 players in that sector, are struggling with 10%. But within that sector, you just notice maybe one or two, first, second, third, sometimes has like 80% of the market share within the sector, right? So the spread of the sector, to a very large extent, might not necessarily impact on whether or not you succeed, because most of the time dominance is always residing around not more than two, three, four guys at the most, right? So most of the time, the guys you're really eyeballing are probably not more than five, for the most part. So it's not much about the spread, right? But it's more about what is the unfair advantage on how I can actually break into this hold of dominance, right? How do I become the first three or the first four guys in this sector? That is where my focus is, because really that's where most of the market is, right? Except for markets whereby 1% is significant, right? If you're into consumer goods, for example, consumer products where maybe the target market is, let's say, 100 million people, 100 million Nigerians, and if you get 1% of that, that is significant. But if you're not in retail, really, where do you get really those target audience that are in hundreds of millions? A lot of time, most of what people put in slides, right, are not realistic. You see a lot of people put up decks, right, and tell you target market 100 million, or target market 50 million. A lot of times, if you really dig into those things, they are not realistic numbers, right? They're not actually shown very thorough job done to really identify the true, active buying market for whatever it is that you're selling, or whatever it is that your solution that you're giving. So a lot of times the target market that you first of all put on your decks, right, is just hypothetical. The real target market a lot of times are a lot more smaller than what you have on decks. So the guys that control those target markets, probably not more than three, four, five of them, that has 80 in all industries, that has like 80% market share. In every industry you want to mention, if you pick an industry, I'll tell you the first four guys there that control like 80, 85% of that entire market. Every other person is catching up with like 10 to 20% of it. So really, it's not much about the spread, but what is that unique, unfair advantage that can help you break into that stronghold, right? How do you want to distribute in a way that you are able to tap into the network of guys that is currently being served, right, by those leaders, those top three, top four, top two, whatever they are in that sector or in that particular industry? If you have that at the back of your mind and you are able to work that out clearly, right, on how and why you would win, it will take you closer to your desired destination for your fintech. Whether you as the founder, whether you as the consultant, whether you as the legal advisor, right, to the fintech, if you're able to help them figure out, or able to ask them questions that can help them figure out why will they win, right? What is that unfair advantage that can help them hack distribution for what they are doing, that would really help them go a whole lot. And then, of course, as you move, you start to figure out some of the other extra things, like Miriam has mentioned in her presentation. So I'll just keep it there for now. Just thought to just add this little bit to the wonderful presentation that Mariam had done earlier. Thank you.
All right, thank you so much, Mr. George. Really, really appreciate your thoughts within the session. You were able to highlight very key things still all around the subject matter of the business models, um, sector spread, and profit models. So thank you so much, sir, for helping us run through class. So. I noticed that we are not so many in class. I tried to reach out to quite a number of us, and I got some response that quite a number of our mentees are having challenges with their network. It seems to be a very prevailing factor in recent times. But I want to kindly confirm that for those that are in sessions, we will still be able to take presentations from you guys, right? For those of you that are in the session. So please we want to ask, we know that it was a group work that you people collaboratively did, right? People made the work collaboratively. So I noticed we don't have any of our presenters on the call. Well, I was some reached out to me saying pointing out one challenge or the other that they currently have. So we want to take presentations. So presenters, let's say presenters, members of each group one and group two, if you can have like part of you step in to make the presentations, I can share your slides on your behalf if you need that. But please, we like for to take volunteers who can really, really step up to do that. Like we mentioned, our presentations are also a core part of class. Is a way for us to also see that you guys are getting a hang on some of what you have researched on, and if there are room for corrections and for feedbacks, we give them based off of the agendas that we have set in the session. So please and please, can we have people volunteer to take presentation on behalf of Group 1 and Group 2? If we have members of Group 1 in class, please let's have someone volunteer to do that on behalf of Group 1. Can we all hear me, mentees? Can you hear me? Okay. I see it seems we are not necessarily responding. Please, can we all respond? Uh, if we don't have anyone who is in group one right now, we can still take presentation from group two. So please, members of group two, if you're in class, we know that you belong to either one of these two groups, right? You can step up, try and see if you can make presentation on behalf of your group. If you need help showing slides, like I said, I would do well to step in to do that on your behalf. So please, do we have any member from group two? Okay. You still seem not to be responding. Please, I really, really want to encourage us to learn to take the initiative to want to contribute to class as much as you can. All right. It is not about showing off that you are the most knowledgeable, all right, within that sense, but just ensuring that you are able to that you were part of a group work and that you did your own part in ensuring that the work was able to be done, and you just coming on to represent your team on behalf of the fact that there is a need to so still calling out in 1 minute, do we still have volunteers that can step in to make presentations on behalf of the team? Okay. All right. So what we are going to do instead, uh, it seems we are not necessarily confident in our abilities to do that. We would just go straight and take questions, right? We would take questions. Our mentors have taken out their time to be in class, to share their thoughts, to let us know to let us know just generally defining what business models are, especially tied to fintechs, how profits within fintech is like, what profits in fintech is like, and then how the sector grows. So please, if you have any question you would like to ask the mentors, obviously it was a 1 hour of them sharing their thoughts. Right. If you have any questions, we'll be taking your questions now. Please, let's take questions. We'd like for you guys to respond. Please respond, ask questions. Let's get to hear your thoughts. Let's get to hear you speak.
I would like to say something. So I'm sure everyone on this call understands that me and George took out an hour and 30 minutes of our time to be here on this call to mentor you on this topic. And I don't think that it's it's nice that we're all on this call. We did the presentation. It's a group work, right? So it means that every single person on this call, you're either a part of group 1 or 2, and you contributed to doing the presentation. And nobody is willing to take up the responsibility of doing the presentation. It's just you talking through the same slides that you all worked on, and anybody should be able to do that. I mentioned earlier when we started um, this session that time is money for everyone. You know, people giving up their time to be here rather than anywhere else, and that's what you all did, right? You took out your time to be on this call. So why don't we all want to get the value of the reason why we're on this call? So maybe somebody should still do a presentation or talk through what it is. If your network isn't good enough, I'm sure Dennis can present and you just talk through it. You can't take away 1 hour, 30 minutes of your time to be on this call and not achieve, the reason why you're on this call. So that's what I wanted to add because George and I have things to do and we decided to be here to speak to you.
Thank you so much, Mrs. Mariam, for that. Please, we still encourage the team. Anyone who, but please, can we indicate that we can hear me because
I can hear
I
you.
want
I
to.
can hear you loud and clear. I'm sure everyone can.
Okay. So please, if you are in group one, please can you indicate by raise of hand? We want to see your hands. Okay. If you are in group two, please kindly indicate. Mentees, are we sure we are in this session or we just turned on our phones, entered and then dropped our phones and left? Please indicate if you are in any of these groups. Please indicate by raise of hands so that we can see you. Okay, please, you said you're from group one. All right, please. I think only you are from group one. Do we have group two members in the class? Let's see. Let's see. We just want to know that you guys are in the session, if you are actively listening in the session. Taslima, Fuluwa, okay, I can see some others have stepped up the call. Okay, you're also in group one. All right, so can we have, any of any of you guys, maybe just try and then just I will share your slides, then you can try to speak to the slides.
Hello, everyone.
Yes, hello, please.
Okay, good afternoon. So I'm from Group 1.
All right. So
Yeah,
I
and
guess
I
you would
would love
be,
to present for Group 1.
so you said,
I said I would love to present for Group 1.
oh, all right, thank you, please. Let me get
Then,
your slides up.
yes, sir, please help me share my slides.
Just give me a minute. I'll be doing that soon. Okay, can you see my screen now? Sorry, I'm
Yes, I
using
can
my
see your
phone, so
screen.
that
Yes, I can see
kind
it.
of difficult doing that in my system. Yeah, cool, please go ahead.
Sir?
Yes, please, you can go ahead.
Okay. Okay, so first of all, I want to apologize for our presenter not being available. And also, I'm not really conversant with it, although I've read it before. Yeah, because I was trying to prepare for my final exam in school. So I was not really available throughout the week. So I'll move on to the presentation. Fintech adoption and its impact on small and medium enterprise. So it's just talking about how fintech has actually helped small and medium enterprise, like the impact it has made on small and medium enterprise. Okay, so the next part. Okay, so what's our fintech business model? So the next part. So fintech business model describe the different ways financial technology companies create, deliver, and capture values within the financial service ecosystem. So just talking about how fintech models, it describes the different way financial, that's fintech companies create, the way they deliver, the way they capture value within the financial service ecosystem. These models typically leverage the digital platform, data analytics, and automation to offer more efficient alternatives to traditional financial service. So just talking about the business model that the fintech has created and how it is helping to offer more alternatives to traditional financial service. Okay, so the next slide. So what are fintech impact on small and medium enterprise? Okay, so there is faster payment and transfer, like we have seen in our current day, current day Nigeria, let me just use that word. So fintech has greatly improved the growth and sustainability of small and medium enterprises, especially in overlapping countries like Nigeria. Many SMEs struggle with limited access to finance, high banking charges, and in payment. Oh God, this is not clear. Okay, I'm so sorry for the break. So fintech has greatly improved the growth and sustainability of small and medium enterprise, especially in developing countries like Nigeria. Many SMEs struggle with limited access to finance, high banking charges, and inefficient payment services. Fintech solutions such as mobile payments, like the one we use like in our OPay, and digital lending platforms, um, and helps solve these problems by providing a faster, cheaper, and more accessible financial service. So I would like to give an illustration here. So before I started using OPay, I used Zenith Bank, and I realized that Zenith Bank, their transaction was kind of slow while making transaction, especially like with their banking app. But when I started using OPay, it was faster. Yes. So I could easily make transfers, and there was low charges too. So that's what like this place is talking about. For example, companies like Flutterwave and Paystack enable SME to receive payments easily from customer, both locally and internationally. While digital lending platform also allow SME to access quick loans without strict requirements to traditional banks. So what are the profitability and financial inclusion? Fintech solutions are not only profitable to the companies providing them, but also beneficial for SME. By reducing transaction costs and improving efficiency, SME can increase their profit. Fintech also promotes financial inclusion by giving undeserved business access to financial service. Studies have shown that SME that adopt fintech tools often experience increased sales, better customer reach, and improved financial management. This makes fintech an important driver of economic growth and entrepreneurship. So even in commercial banks that have adopted this fintech model, you see that it has also helped their transactions to be faster. The other impact, access to alternative funding, improve cash flow management, digital record keeping and transparency, market expansion and e-commerce, seamless integration with other business tools. So what are the regulatory framework and compliance challenges? Regulatory and compliance. So the regulatory frameworks, that's the regulatory body governing it, shapes licensing and consumer protections. Obligations are mandatory across jurisdictions. So it's a mandatory thing that in all jurisdictions there should be a regulatory framework governing the fintech. Compliance is the obligation of the fintech. Compliance is the obligation of the fintech ecosystem to operate in accordance with applicable laws, regulations, and supervisory guidance. So compliance is when these fintech are now operating in accordance with the applicable laws. In Nigeria, compliance is ensured by the CBN, the SEC, with additional insights from the National Information Technology Development, and also to an extent, Nigeria Data Protection Act. So despite these advantages, fintech faces several regulatory and compliance challenges. Governments and regulators often find it difficult to keep up with the rapid pace of technology innovations. Requirements such as know your customer, that's KYC, and anti-money laundering regulations can be complex and expensive for fintech companies to implement. In Nigeria and other developing countries, issues such as weak regulatory framework, cybersecurity, and low digital literacy can also limit the effectiveness of fintech. So what are the other challenges? There are challenges of licensing complexity and cost. Licensing can sometimes be very expensive. There is data protection and privacy compliance. Fintech has to comply with Nigeria Data Protection Act and the NDPR framework. There is the challenge of cybersecurity and fraud risk allegation, talent and compliance, capacity constraints, enforcement inconsistency. Yeah. So recently in Nigeria, from my research I've read so far, I heard that there is no one fintech, there is no one board regulating fintech, like it's just different body like CBN, the NDA, and the rest of that. So this can cause problems leading to enforcement inconsistency, the taxation and economic uncertainty. So in conclusion, fintech has transformed the financial landscape by making service more accessible, efficient, and inclusive. For small and medium enterprise, it provides opportunity for growth, improved profitability, and better access to capital. However, to fully benefit from fintech, there is the need for stronger regulatory frameworks. Yes, there is a need for it. Improved digital infrastructure and increased financial literacy. With the right support, fintech can continue to play a key role in driving SME development and economic growth. Thank you so very much, sir.
Oh, thank you very much. Thank you very much, Praise, for stepping in to still make presentation for your group. Sincere apologies. I was logged out on my other device, so I am using a separate one right now to speak, and I'm unable to turn my video until I get my other device on. So, still looking through. So we've been able to take presentations from group one. We will still want to see if we have any member of group two in the session. Okay, we had two indications of people from group one. Please, can we still have someone who is or will be able to take presentation for group two? Can we see your hands if you're a member of group two? Please kindly indicate if you are also a member of group two, please. Let's quickly do that. So we would address this after the session. We would address our participation and other aspects as to attendance and our group work after the session. But so that we don't keep logging this, let's quickly, we'll be taking questions, right? We'll be taking questions. I'd already initially made a call for questions. Let's still go back to that. Let's still get back to that. If we have any questions you would like to ask, please kindly do well by the indication of hand, or you can send your questions to the chat box and we will read them. Do we have any questions? Do we have any questions? Do we have any questions? Okay. If there are no questions, I want to kindly encourage you all. This is an educational internship, right? And it is designed specifically to engage you, not just in research, but to also engage you on a knowledge-based level, where you are also able to, where you are able to ask our mentors questions, get to pick their brains, if I'm permitted to use that word, or use those words, get to pick their brains and try as much as possible to get the best out of this session. So please, I really, really want to encourage us while we come for these sessions, let's be prepared to have all of these sets. You know, once you do your research, make sure to gather research questions that you can ask our mentors so that we can have a very, very robust and interactive session. With that, we come to the end of today's session. Sincere apologies to Mrs. Mariam and Mr. George for the turnout in the class. We would work on making sure that we have more people more responsive in each session. Thank you so much for your time. We sincerely do appreciate. For the mentees, I want to encourage you. You can revisit this session. It's being streamed to YouTube, so you can always go back, rewatch it. Anything that you might have missed out in the session, maybe because of network challenges or one issue or the other, you can always visit that. Please do not forget to share what you have learned. Mrs. Marian's slide, she shared some of her contact details, like her LinkedIn, the link to her LinkedIn. You can always do well to connect and see what she's doing within the fintech space and things you can also take advantage of. So yes, and also Mr. George, you can also try to follow him on LinkedIn and see what he's doing within the space also, and like try to just overall become better, because the idea is that the learning should not just end with the session, it should move beyond here. So thank you everyone for being present and making yourself available. Please watch out for your next tax. Let's do well to respond to each tax as it is sent with our roles and responsibilities, and let's do well to contribute to the work on ground. Thank you, everyone. Goodbye, and enjoy the rest of your day.
Thank you.
All
Bye,
right, thanks.
everyone. Thank
All right,
you.
thanks.
Yeah, goodbye.